Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good weekend, and hopefully you had a very good Monday session in the markets. And in today's action, the S&P and the QQQs both pushing to brand new all-time highs. It was a very decent day in the markets. Rotation was fairly good, although financials and healthcare were a little bit left behind. But we had so many stocks in so many different sectors pushing, and a lot of the smaller cap stocks pushing as well. In terms of the meme stocks, in terms of the narrative stocks, the thematic stocks. If you take a look at this list right here, you'll see names like Oklo, Resolve, Iran, Iris Energy, Affirm, Symbotic, even CoreWeave up higher today, SMR, Circle, names like Elf Beauty, even names like Chewy, which came down after their earnings, were up significantly. Even something like ASML, which has been really trailing behind the semiconductor landscape, was higher. We have a lot of stocks to cover today in today's video, guys, and as a matter of fact, we don't really have much news. So, in terms of today's video, we're going to try to cover the most amount of charts possible and give some ideas for some trades, because we know that this week is going to be very, very heavy, of course, because of the Federal Reserve decision that's coming on the Wednesday session. I will remind you at this current time, the probabilities still stand for a 0.25% interest rate cut, 96% odds, as a matter of fact. Thereafter, we might have one more cut coming in the month of October, 74% odds there, and in the month of December, possibly another one too, 68%. Now, the big focus of the Wednesday session with Jerome Powell is going to be whether or not the market is pricing in too many rate cuts rather than too few, right? So we'll have a look at what Jerome Powell has to say and what the Fed has to say in the summary of economic projections, where they give their outlook in the medium term and long term for the amount of rate cuts that we could be possibly expecting. Number two, the amount of inflation that the Fed sees in the near-term horizon. And number three, the GDP outlook as well. And a little kicker, number four, the unemployment rate. So we get the summary of economic projections released once every single quarter, and we are going to try to determine whether or not those estimates being made by the Federal Reserve are in line with what the market has been pricing in so far. Obviously, if there's too much of a discrepancy, well, then the prices in the market will kind of have to adjust progressively to those discrepancies. Meaning, if the market has priced in too many rate cuts so far over the course of the last 2 to 3 weeks, and the Federal Reserve has penciled in a few less than this, well, of course, the markets are going to have to reprice a little bit of that to the downside. It will be a very volatile event on Wednesday. Anytime you actually have a Fed pivot, it usually is a very big volatility event. And as a result, we're going to get a lot of questions answered. Questions in terms of the four factors that I named previously, which could give us some direction, could give us some guidance into the next few weeks and possibly into the next few months for trading as well. So, as I was saying yesterday in the top 5 options video, guys, if you wanted to take things very lightly before Wednesday, so that way you can just wait to position before having a lot more information and being able to make a clearer decision rather than just guessing or betting on what the Fed is going to do, that would be completely understandable. Myself included, I will be doing just that. In terms of the wheel strategy, I have deployed some capital, but I have a ton of buying power on the sidelines, just waiting for those final confirmations and those final pieces of guidance throughout the Wednesday session, and thereafter I'll be positioning a bit more. In terms of my longer term trades, those are still on, haven't closed a single one. So in today's video, we're going to be taking a look at a few things, namely a lot of charts. Number one, we'll be going through our technical analysis portion of the video on the SPY, on the QQQ, and all our other major indexes. See where the rotation is, see where the rotation isn't, and whether or not there are some possible trades to be derived from these sectors. Number two, we're going to be going through the technical analysis portion of the video on our big tech list right here. And you can see all across the board pretty much, big tech having a phenomenal day. A lot of those names up 1, 2, and some names such as Google up 4%. So we'll be doing a quick rundown here of this entire list. Thereafter, we'll be getting into the favorite segment of the video for everybody, essentially, which is going to be the biggest gainers and losers of the day, of which there were a lot. So many names here, pushing up 4, 5, 6+%. So we'll be taking a look at this because we're entering a phase of the market now where people are definitely front-running a lot of these interest rate cuts and a lot of the bullishness associated with it. So you're seeing a lot of names, especially some of the smaller cap names, some of the more narrative-driven names, some of the retail fan favorites. They're up 15, 20, 30, 40% possibly in the last 2 weeks. So I just want to reiterate, guys, do not chase some of these names. Playing momentum is fine, but if you feel that you're chasing, you have to reduce the size and always trade with the stop loss. So we'll be going through a lot of these names at the end of the video, the positive ones, but also some of the negative ones, because we do have some names that are lagging a bit behind. So we'll try to determine whether or not there's any swing trades to be made across the board here on all of these names. And at the very end of the video, I'll be taking you guys through my portfolio just to see how I am positioned into Wednesday's session. And that's going to be it for today, guys. So without further ado, let's jump right into the action, shall we? So today, the SPY up 0.53, the Q's up 0.86. Very strong performance all across the board. You can tell that by the heat map right here, to where it was mostly concentrated into tech. Now, healthcare never really participated today. It was always kind of lagging behind. Financials had a decent day. Defensives, sadly, to the downside, but the two biggest ones, Walmart and Costco, not really doing too much. In terms of the bottom half of the market, you also had some mixed movements therein. Even though we had some decent movement to the downside on yields, and we know that these are all, for the most part, interest rate sensitive sectors, still, even though yields were down today, this bottom half of the market did not rally as hard as it has some days in the past few weeks. Moving on to the one-day relative, you can see that even better, to where communication services was your best performer of the day. That is largely due to Google's 4.3% day. Shout out to Meta and Netflix as well in that segment, pulling that whole communication services landscape higher. Cyclicals were also higher, technology higher, industrials, materials, utilities, and energy. Shout out to consumer cyclicals, guys. Consumer cyclicals have been, for all intents and purposes, a bit of a dead trade over the past, let's say, 2 to 3 years at this point in time, but I'm exploring a few of these names more and more for possible positioning, for possible recapture of that consumer discretionary trade, not immediately, but something over the course of the next 6, 12, 18 months. To the downside, you had real estate, healthcare, and consumer defensives, unfortunately. On the 1 week relative, guys, we still stand fairly broad and fairly good in the markets right now. Technology, your market leader, and unfortunately to the downside, still healthcare and consumer defensives, but everything else performing quite well as we move into the all-time highs, into rate cuts. Now, some people are saying that the rate cuts might just be a sell the news event. Well, let me just say, guys, you don't know, right? It's all going to be whether or not the rate cuts are a bullish rate cut event or a bearish rate cut event, a hawkish one or possibly a dovish one. Let me explain. I've talked about it a few times so far. It's all about whether these rate cuts are deemed to be reactionary, meaning the data is unwinding too quickly to the downside. The macroeconomic data is getting worse and worse, and the Federal Reserve feels the need to cut rates in an accelerated manner because things are getting bad. That is what's referred to as a reactionary rate cut. And when you go back in history, usually that is when, yes, indeed, rate cuts are then followed by further declines in the market because the damage is already being done in the economy. That's why sometimes after rate cuts, when you look at history, the market goes down. If you just look at those statistics without any context, you would just assume that most times that the Fed cuts, the markets go down. But it's not always true, because there's a second type of rate cut. The second type of rate cut is what's known as an accommodative rate cut, otherwise known as a dovish rate cut, whereby the economy is still doing okay. Some aspects are slowing down, but just to ease the pressure on the financial markets and to ease the restrictions on financial conditions, the Fed accommodates the markets by reducing interest rates before things actually get negative or things actually get bad in the economy. So that determination will be able to be made when we have the summary of economic projections. When we look at the GDP projections from the Fed, the inflation projections, the unemployment rate projections as well. If the GDP projections and the unemployment projections are moving the wrong way really quickly, well, then you will be able to deem this to be a hawkish or reactionary rate cuts. If we look at the summary of economic projections and things are roughly in line with what Powell has been telling us over the last 2-3 months, whereby inflation has been having a slight uptick because of tariffs, GDP is still solid but trickling down over the next 6 months, and the unemployment rate stays relatively stable, well, then you'll be able to determine that, as a matter of fact, these are just accommodative rate cuts. So it all has to do with that summary of economic projections and also the tone with which Jerome Powell delivers his speech and answers questions, right? You obviously don't want to hear him being nervous about the current landscape of the economy or the near-term future of the economy as well. So that is the A bit of a rate cut preview for your guys, but in terms of the economic events that we have this week, tomorrow, retail sales, I mean, we're going to come in at 0.3% versus 0.5. Not too bad, but in all reality, guys, most traders and institutions will be waiting to position with some larger trades after the Wednesday session when we get the big event, right? That being said, we also do not have any earnings this week that are notable to us until about Thursday, where we get FedEx and Lennar, one of the home builders. That's been a fairly hot trade, so we'll be curious to see whether or not they can keep the momentum going right there. Other than that, though, no major trades to speak of. So with that introduction out of the way, guys, let's move into some charts right away. We're going to try to cover as many as humanly possible in this video while keeping it around an hour, possibly less. So taking a look at the SPY right now, guys, moving into the rate cuts, all-time highs, looking very good. It does raise the question, right? The markets have ran so much. Is it all priced in? Is it going to be a buy the rumor, sell the news event? As I was saying in the introduction, you can't really say that. It's going to be all about the tone and all about the type of interest rate cut that the market is able to derive from Jerome Powell's speech. But that being said, guys, looking very strong right now. And in the event that you have any pullback as a result of that speech, you're just looking for a daily higher low at this point. Anything above 634 on the SPY, looking for a new daily higher low. Daily uptrend is well in motion, and you got a lot of support down here, 640 to 635. So we will take it one day at a time, but suffice to say, the bulls retain full control of this chart and many, many, many others, looking very strong here for the continuation of the weekly uptrend with a lot of space under us in the event that we need to fall back because the message is not well received after Wednesday. Moving on to QQQs right now. QQQs, another new all-time high, very strong here, led by Google, of course. Big push, starting to get a tiny little bit overbought on the Qs, but still nothing considerable. You can notice this period here from June all the way through the end of July, where we stayed perpetually overbought, and yet the markets still grinded higher. So we will focus more on price action at the current time, and the price action is saying the bulls are in full control, and any move lower looking for a higher low. You might be able to pull back here into like the 580 level, which would be a touch of the 12 EMA and a clipping in of some of these few most recent highs. I wish I could draw a elliptical circle right here, but it's not quite working, my bad. That being said, if the weekly chart as well pulls back, you got a lot of support and the 12 EMA below, guys. Support, big level here, 563 down to about 554. Bulls remain in full control of this weekly uptrend. Moving into financials right now. Financials kind of just struggling, right? They tried to go for the breakout, got rejected a little bit. We've just been really consolidating around the all-time high area right now. So very choppy on the daily charts, but the chart that makes the most amount of sense to me is the weekly, right? We know that the bulls have had this very nice weekly uptrend so far, and even if we don't set a new all-time high and move a bit lower, we're still just looking for a weekly higher low at this point in time, right? Anything above 51, looking for a weekly higher low, and additionally, you have a lot of support down here. This previous all-time high resistance area, 52 down about 50.2, not too bad. So if we're looking for some pullbacks across the banks or other financials, such as maybe Visa is a very good play, in my opinion, right now, 540 down to 530 for some accumulation for some shares or possibly some leap call options. Visa is doing fantastic things. The business model hasn't changed, but it's just been lagging behind the markets a little bit at the current stage. So I like to find these very solid companies that are a bit lagging behind. Other names that you can derive in the financial space that are looking good for a bit of a recovery story are names like FICO, names like possibly Equifax as well, which hasn't been doing much of anything over the course of the past 8 to 9 months. And even a company, very solid company like MSCI, also has just been range bound now since the month of March, but possibly looking for that breakout. Very solid company, nothing bad to say, just grinding higher here on the monthly time frames. I assume that a breakout is quite likely to happen since this one is just a very solid company overall with its fundamentals. We covered their earnings back in July. Very strong name, quite a cheap multiple right now as well. Moving on to our healthcare segment, the segment that tries to break out but doesn't seem like it wants to. Healthcare still kind of range bound here at the local highs. That being said, who is in control right now? It is still your bulls, even though we have a bit of choppiness here and we're looking for some higher lows to possibly expand this trend. The clearest time frame, in my opinion, guys, remains the weekly time frame right now with a very nice weekly engulfing move. We're currently sitting on the top end of 137, looking to form some sort of a weekly bull flag to possibly go for some expansion of the sector. We will see when that happens. It's not a question of if at this point in time. I think it's just a question of when. And here, still not a bad location to be accumulating some XLV. If you guys don't want to play healthcare names individually, well, I sometimes don't as well. And that's why I bought some Leap call options only on the healthcare ETF, not on individual companies, but shout out to a few individual companies, of course, that have been just destroyed recently, like NVO, UNH is still, even though it's ran, UNH is still very low, but a lot of these plays are going to require a lot of time to recover. So I'm a big proponent of just playing the index instead in the event that you don't know which individual healthcare name to pick. Moving on to semiconductors right now, semiconductors up 0.94%, very solid performance from them today. Beautiful continuation of the daily uptrend right now. And you got a lot of fallback space, right? The support range right here, 300 down to about 295. $5 range could provide some short-term relief to the bulls in the event that we get snapped back into that location. You would be looking for a higher low, though, anything above 282, looking for a new higher low for further trend continuation. And I mean, shout out to a few names that have really been moving really hard recently, guys, especially names like ASML, right? Look at ASML. This arguably is a faster rally than when we came off of the April lows. Very strong, a lot of participation from other segments of semis that just haven't been doing much. I mean, look at ASML, right? Hasn't been doing much since last October, but just recently in the last 2 weeks of trade, you're up like 21% on this fantastic company. The company, arguably, even at 867, is indeed still a buy. It was a buy down here. We talked about it many times on the channel. It's arguably still a buy, in my opinion. Names like Micron. Micron is just completely blown off the top right now. Brand new all-time high for Micron. Very, very, very solid performance. However, kind of overbought conditions right now, right? A lot of people have asked me, well, what do I do with Micron? Can I buy it up here? I mean, the answer is no, you know what I mean? Like, we were kind of buying it down here in the lower 110 area. It's not a buy up here, but if it is a pullback, if you do find a pullback on this one, probably a buy. But the last thing that I like doing on many stocks, guys, is buying an 82 daily RSI on a move that looks like this when the stock is already up, what, like 30% in just the last 2 weeks, something like that, 40%? Probably not the best entry criteria. I understand the momentum is very good, but when you're late, and you kind of got to realize that, right? I'm a bigger fan of playing pullbacks, and shout out to many more. Names like LRCX, really pulling ahead right now. Fantastic move after the local lows were hit at about 94. Even this one too, right? This one usually doesn't move that hard. 27% in a very short amount of time. So semiconductors as a whole are broadening out, but you still have some names that are kind of like left behind. Texas Instruments is one of them. Qualcomm is another one of them. So some names are left behind, but most of those names have to do with a lot of the consumer-facing segment of semiconductors, personal electronics, cars, also the industrial applications. So they've unfortunately not been able to get through all of their inventory because some of that cyclicality is still plaguing that aspect of semiconductors. The aspect of semis that's doing really well, of course, is anything data center focused. Now, moving on to the IWM Russell, the Russell right now up about 0.42%. Very solid day for the Russell. You would have expected a bit more expansion with the decline in yields that you saw today, right? Today, the 20-year yield was down 0.6% and the 10-year yield was down about 0.74%. Don't pay attention to these numbers on the right-hand side here. That's just because the day was reset after the close. The true candles were actually red for the day, of course, but still, the Russell was some decent performance. I wouldn't say I'm a big fan of playing the Russell, but it is definitely a thematic trade right now. In the event that you get a pullback here to 232 down to 226, that would be the next reload area for some possible swing trade longs. Looking good on the weekly timeframes here, right? Very strong weekly uptrend, nice breakout of a big level. This 232 to 225 is huge. That's the previous highs from 2021 and also some of the highs from back here earlier in 2024 and 2025. Now, if we get a pullback into them, let's say after Powell, decent area to reload some possible longs because rates will be coming down and the Russell is a fairly broad ETF. 17% of that are financials, more specifically small and medium banks, right? You also have a tech portion to that, but you have small cap healthcare, which has been crushed, such as biotech and things of that nature. So a lot of components of the Russell haven't really truly found some legs just yet. So I would be a decent fan of buying some of these pullbacks if you have a 6, 9, 12, 18-month time horizon and you let the small cap thesis expand, right? It's not a thesis that you just snap your fingers and the Russell tomorrow is going to be trading for 300, but it can be a very nice catch-up trade because small caps, let's be honest, have not done anything in 4 years. Now that we're embarking into a rate cutting cycle, maybe now is the time to shine for the Russell, and usually these bull runs on the Russell can last for quite some time. And I do believe that you're still relatively early. That being said, moving on to XLP kind of breaking down here. We got a 6-month area of support at about 79.50 at the lows. If you come a bit lower here, guys, I do think XLP as an ETF would probably be a buy. You got a lot of names pulling back in consumer defenses, right? Colgate Palmolive continuing to pull back. You got names like Clorox, which just pulled back a big amount. Names like maybe Philip Morris. Philip Morris has just been nothing, but it was very hot earlier in the year. MO also pulling back a lot. Pepsi pulling back from its highs as well. Coca-Cola pulling back from its highs too. And McDonald's, although McDonald's is in discretionary, right? Still, names like McDonald's pulling back. So you can kind of see a common theme here to where people have gotten really greedy about the growth names, about the tech names in the most recent few weeks. And as a result, they might just be pulling some bets out of defensives, maybe even out of healthcare as well, and several other of the more slower moving markets in favor of growth. So I'm a big fan of buying some of these pullbacks on my favorite names that will include Walmart. I mean, Walmart's at the highs, but down here we were talking about, it was a decent little nibble for some Walmart and playing the wheel under here. And Costco. I mean, Costco also has just been struggling for a better portion of the last, let's say, 9-10 months. And by struggling, I mean, it's just not perpetual highs like we have on a run right there. You know what I mean? We're just kind of a bit range bound here, or at least we have been as the price consolidates into the current valuation. Costco for me, lower 900s is a little bit of a nibble for our long-term portfolios as well. Moving into the VIX, even though the markets were green today, you can see the VIX trying to put together a little bit of a move here into the Wednesday session. As I said, it will be quite a volatile session. Either way, that being said, we'll closely monitor it. If the VIX really pops up higher because the markets go bright red, you guys know the drill. When the VIX goes high, it's time to sell some options because you get the best premium, especially short put options. So what I would be doing into Wednesday, and what I am doing as a matter of fact, is building a shopping list. If you guys are the type of people who like to run the wheel for some short puts, put together a shopping list. I did the top 5 options video yesterday, but you guys might have your own shopping list. So build a list of companies and also derive what levels would you be willing to play those companies at if they come down into your lap. And that way you're kind of ready for anything that we can be thrown or that the market can throw at us on the Wednesday session. Onto the 10 and 20-year yields, as we said, breaking down nicely right now. So the 10-year yield currently approaching the 4% mark. The key level was 4.2. We cracked through that. Very nice weekly downtrend and possibly the start of some monthly downtrending action as well on the 10-year yield as it kind of catches up to the shorter term yields, which have really, been in line with market expectations. It's just the 10 and 20, which have been higher because of the aforementioned bond vigilantes that I talk about in a few videos prior. Moving on to the 20-year yield right now, we can see it clearly cracked through our big 4.75, 4.7 level, which it kind of held since the month of April. Beautiful weekly downtrend. We're currently heading towards the 4.5 location. Very strong. These will probably move a lot on the Wednesday session. And as a result, TLT, our infamous bond trade, the trade that did nothing for a better part of the last, 6 months, finally starting to come alive, coming into resistance right now. Let's say 90 up to about 93. If you clear that over the next few months, because it probably won't be days or weeks, in the event you have to do this in multiple stages, well, you got to clear this one first. And I do think we have a good chance of going to hit the $97 to $100 range at some point over the next 6 to 9 months as we make our through these rate cuts. And it gets harder and harder for the bond vigilantes to kind of hold back the bond trade, right? As we kind of remove some of the uncertainty factors altogether. Now moving into gold also having a very strong start to the week. Gold was up about 1% on the day, looking very strong. They just take a little bit of a breather, a little bit of a pause, and now moving north. So not much pullback at all, just straight bull flag at the top of the move and now pushing higher. Very tough for us to chase gold at this time, guys. Look at the RSI on the daily, very overbought conditions right now. On the weekly, we're also trying to curl over on the MACD, we have curled over, trying to push higher on the RSI as well. That being said, guys, it's impossible, in my opinion, to chase a gold trade. Unless you're day trading with clearly defined levels, if you're going for a swing trade here on gold, you are very late. And if there's one asset that I really don't want to be late on because it moves very slowly, right, is probably gold. It moves very slowly, then it has one big burst of breakout, and then sometimes, or a lot of the times, it does slow down thereafter. So the next target for gold, of course, is going to be 3,700 psychological. If you do pull back, you got a great fallback location down there around 35, which would be the 12 EMA on the weekly and just shy of the previous resistance area that we broke out of, which of course is now support. Moving on to Bitcoin right now. So Bitcoin, not too bad of a day for Bitcoin, but we're getting rejected here by a close area of resistance. Talking about 117 to 119. I mean, you can move this box up or down a couple $100 and you guys will probably get a sense of where we're reacting from, right? Well, it's all of these guys right there, a few areas that rejected the market prior as well, and now it's kind of happening again. So the bulls have a very nice uptrend going right here. A lot of space for a new daily higher low, anything above 109, 109.5, let's call it, looking for a new higher low, possibly to tackle this resistance range one more time. The clearest time frame for me is still a weekly time frame right now. It is a weekly downtrend, but the size of this weekly bounce on the fibs is quite good. So anybody's guess whether or not this one is going to be able to break higher or lower. I think that's largely going to be dependent on what the Federal Reserve has to say for us in the next coming few days. But, we got a nice 50, almost 618% retracement on the weekly fib. So looking pretty good, guys. Even if we do come down a bit lower, it sets up the bulls for some nice space. Try and reverse this into a new weekly uptrend and put an end to this monthly consolidation. The way that I'm playing it, well, whenever Bitcoin came down here, I was buying, and we were saying that on the channel. We were also selling some short puts under the market right now. As it is right now, I'm not really touching it because I'm just accumulating I've accumulated the positions that I wanted to on Bitcoin right now. So I'll just be kind of sitting on the sidelines until Wednesday. If it wants to break and run, no problem at all. I have my positions, but if it does want to pull back as well, short puts under the market, I'm still a big fan of doing. On to Ethereum right now. So Ethereum had a great end of the week on last Friday, and now unfortunately we did pull back a little bit here throughout the weekend and into the Monday session, but all things considered, it's not looking too bad. We had some very tight consolidation here at the end, and then we were waiting for the break, right? It could have broken either way. Either way was valid, in my opinion. It was like a very big retracement, and now the bulls want to run with this. So they're trying to go for the daily uptrend breakout, and they're trying to put an end to this weekly consolidation. We will see if they're able to do it, in my opinion. Once again, largely dependent on what comes out of the Fed on the Wednesday session. In the event that you break down, because I'm pretty sure people are more concerned about the breakdown than the break higher, if you get the breakdown, it would be a weekly downtrend if you crack the 4,200 level, which is fine because a weekly downtrend in this case would just mean further monthly consolidation for this chart. And a very logical area to bring us down into would be 4,000 to 3,700. Just give me a little bit of a breakout, retest, and possibly a run. So that would be the next area on Ethereum that I would be looking to accumulate more positions, whether you guys are using Ethereum itself or ETHE or ETHA or BMNR or SBET or any one of the other Ethereum treasuries or other proxy products. Well, you always want to be looking at the Ethereum chart itself in order to make those judgment calls for when would be decent buys, right? So that's everything for your overall market preview. Hopefully you guys enjoyed that. Now let's dive into some big tech names. And after that, we'll get through a ton of the biggest gainers and losers, shall we? All right, so if we take a look at Apple first, Apple up about 1%. Very strong day for Apple, but still, off its most recent highs by a little bit right now. The bulls did a great job of saving these lows, and we were talking about it too, right? Daily uptrend saved at the current moment, and we are pushing higher towards our 241 highs. Why it matters, guys, is because this is a very big area, right? It was prior resistance for a long time. They used it as support back here as well. And coming into it, initially it was resistance. We broke above, and now we're looking for a back test. The weekly charts are the clearest charts, in my opinion. The areas that you really cannot lose right now for the bulls is about 225. You lose 225, sadly, the weekly uptrend comes undone. And you might just be looking for a bit of consolidation back down here to the 220 to about 210 level, which would just be looking for a monthly higher low on Apple. Now, I like the Apple chart. I think it looks pretty good, but if you get some decent volatility at the midpoint of the week and some reason we come back down into the mid 220s, what I've been doing recently whenever I get the chance is selling some put options at these lower levels down here into the 220 range, which is also the monthly 12 EMA. an area that I really like selling Apple puts down in there. In terms of swing trades on Apple, I have already closed them. No swing trades for me. We had some call options from here, and we rode them pretty much into the 238, 239 highs. So we're currently out of those trades. Right now, if I see any swing trades on Apple, debatable, right? You'd probably want to be a bit lower down here. I mean, last Friday, it's an accumulation trade, right? Because you never quite know. But if you're accumulating down here and down here, looking for the monthly pullbacks, talking about swing trades for months, not necessarily for days or weeks, right? But playing these monthly higher lows and going for the expansion leg, that's the type of trade that I'd be looking for on Apple. But as of right now, no more positions for me. Moving on to AMD right now. AMD up 1.63%. Very decent day for AMD. And essentially what they're trying to do here, trying to reverse the trend, right? Nice push up by the bulls, higher low, trying to go for the higher high. All within the context of this resistance range, 171 to about 157. That being said, the bulls are trying to set some weekly higher lows, right? So what we were looking for very simply right now was a beautiful weekly uptrend, weekly consolidation, looking for the weekly lows. How do you know the weekly lows are set, guys? They have to get the daily uptrend back, right? If you get the daily uptrend back, you know, okay, great. Our weekly lows are probably set right now, and the bulls might just be looking for a bit more expansion. If you get that expansion, the next likely area of resistance will be 178, 185, the same area that stopped out the bulls before, an infamous area of resistance from back in the day as well. As of right now, is AMD a buy? I still personally think so, and as a result, I have started a lead call contract position on this one quite recently. In around the 150 range, you're currently looking at 1.29 forward peg ratio, an 8.45 price to sales, which is not that bad in relation to a lot of other semiconductor companies in the space. Revenue and EPS are growing in a fantastic fashion, and I do believe that this company still has two of the best years in its corporate history ahead of them still. So looking good, guys, on the weekly pullbacks, on the monthly higher lows as well. This chart too, I mean, it's pretty much a cup and handle, right? Very nice cup and handle, looking for some expansion. Not too late to position, in my humble opinion. Moving on to Amazon right now. Amazon up a 1.44%. They were up a lot more, but kind of retraced throughout the day. So Amazon's price action in this recent range of highs has been somewhat choppy, as you can determine from this weekly time frame right now. The bulls are not looking too bad, right? We still have a daily uptrend, although it's somewhat awkward. And every time we do pull back into this support range, I keep saying it, guys, 227 down to about 218, decent area to be accumulating some longer term shares. The valuation is not too bad up here at about 220. You're looking at a 1.74 peg, and Amazon is doing so many good things. It seems as though every week we get another piece of news from one of Amazon's lines of business that they're just pushing higher and higher, whether it's advertising, whether it's Zoox, whether it's Project Kuiper, whether it's AWS, and a whole host of other things, Amazon Prime Video, and even their e-commerce business, such as their new, same-day delivery grocery business, which they're trying to scale as well. It's such a broad business and one of my favorite companies in the world, but it's just been lagging a little bit, right? In terms of the 5-year performance, and even in terms of just overall performance. If you take a look at year to date, I mean, several companies are up a lot more than Amazon. Amazon's only up 5.5%. Look at all the other big tech names. So Amazon, probably my favorite catch-up play of them all. It used to be Apple a few weeks ago when Apple was like 200, but now my favorite catch-up trade is Amazon. So short puts under here or accumulating some shares for a long-term portfolio, very big fan. Moving on to Google right now, this one just cannot be stopped. It's looking like Palantir at this point. Ever since the DOJ case, I do believe, guys, that a lot of people were waiting to position in Google for the results, right, of the DOJ case. And now kind of everybody's playing catch up. Google was up 4.3% because they just got a massive upgrade today from Citigroup, essentially raising the price target from about 220, 230 all the way up to 280, which is a very big raise in my humble opinion. And a lot of institutions, I mean, you guys know how this works, right? Nobody wants to be first. Nobody wants to buy Google. There was so much negative sentiment on Google down here while we were buying from people who would come on TV and say, no, Google's going to lose its entire search business to LLM. Anecdotal experiences like, everybody that I know doesn't use Google anymore. They just use ChatGPT. Yeah, well, guys, I mean, the earnings numbers don't lie, right? Do they? And it's been 3 quarters where they keep reiterating that search and advertising revenues are going up double digits still. As a result, we do not see the impact of those LLMs just yet on Google. It doesn't mean that it's not happening incrementally, but to say overnight that Google is going to lose, the roughly 2 to 3 billion people that use some of its platforms on a daily basis is kind of far-fetched, right? It's not going to happen overnight, and the numbers are proving that, and now we are really starting to see a massive ramp up. Is it too late to buy Google? Good question. Matter of fact, not quite if you have a 5+ year time horizon. The valuation is still justifiable, now 10% higher than when we last did it at about 225, right? So it's about a 25, 26 forward price to earnings, about a 1.7 peg. Not too bad. It's pretty much valued the same as, let's just say on a peg ratio, as something like an Amazon. Forward price to earnings, though, is still quite cheap. Free cash flow yield is not that bad. But still, it's not as good as of a deal as I was saying this entire time that it was, right? Even at 200, I was saying it's a good buy. And I've been saying Google has been a good buy now, guys, for the past 6 to 9 months, every single video. Now, I have to kind of taper back on those statements. Now it's coming into kind of hold territory. It's still good for a nibble, but if you're looking for super fast short-term gains, you might somewhat be disappointed because this is a very big move. We're up into the 88 percentage range in terms of the RSI. Very overbought conditions. The daily uptrend is beautiful, but eventually all good things have to pull back as well. So daily uptrend is clear, weekly uptrend is clear, but look, it's like vertical. We're pulling very far away from the 12 EMA. So maybe the next time that Google pulls back is going to be the next chance that we can possibly further position. As of right now, I'm just holding everything. I'm not adding anything to this name. Moving on to Meta right now. Meta up at 1.21%. Decent day from Meta, but still, right? Meta's kind of struggling in around this whole 760 range. We haven't been able to break it the last 2-3 weeks at this point in time. Daily downtrend, nice engulfing move by the bulls, trying to set the higher low, trying to go for the trend change. We will see, can they get it, or will they have to pull back and fill some more of that earnings gap down here? All that being said, the weekly uptrend on Meta is looking still okay. We haven't really lost it since the month of April, so the bulls are not looking too bad. Where you get a little bit of nervousness or a little bit of pause is a break of 733 to the downside. That would be a weekly downtrend, first of its kind in about 4 or 5 months at this point, and that would just be synonymous with very casual monthly consolidation, right? There would be nothing wrong with monthly consolidation on Meta. Matter of fact, I'd be a buyer down here if it does happen, down to the lower 700s. Is Meta a buy up here at 760? Well, it's a nibble for me. It's not a super heavy buy, but it is indeed a nibble at these valuations. I think Meta has a very bright future ahead of it, especially over the next 2 years, but right now, it's just kind of been consolidation mode since their earnings, which is fine. They had fantastic earnings, and that's really what people should focus on. Moving on to Microsoft right now. Beautiful day by Microsoft, 1.07%. Now you're finally getting to see the bulls say enough is enough, right? So I was telling you guys, wait for the bulls to tell you when the bottom is actually made. And now you have a bit of factors of confluence. So now you're looking at a trend reversal play in real time. Notice the daily MACD. That is step number 1, right? Now, it's been curling over a little bit. This is the first day. We've been kind of weakening on the bearishness, moving over to bullish momentum. Couple that with bullish price action. What do we have? An engulfing move. So it means that any pullbacks on Microsoft are going to be buying opportunities with a stop loss below here. You're trying to play the trend reversal trade on the daily and tying it into a weekly continuation of weekly uptrend expansion. So that's what we're looking for when I say let the bulls show you where the bottom is. Now, some people who are more on the aggressive side, you guys will take that entry right away off of the engulfing move, build further positions on any declines with the stop loss still down below there, and then you're just going to go for the whole position increase. Those of you that are more conservative, you'll kind of wait for the pullbacks, the higher lows to be set, and then possibly go for that trade, but not looking too bad at all. Microsoft starting to pull higher, weekly higher lows, possibly set right now at the 492 lows right there. Reacted nicely from the 12 EMA. Am I buying Microsoft up here? No, not really. I bought all the Microsoft that I will possibly ever need. Well, not ever, but down here at these range lows, I did not buy Microsoft during this entire rally. I'm just holding what I have. Tough to build some swing trade positions on it up here at this valuation. I think there's better bets in the market. Moving on to Netflix right now. Let me just check the time of the video. Okay, we're not doing too bad. I'm moving on to Netflix right now. So Netflix up 1.16% today. The bulls, man, 12.15 down to 11.85. This area, right, is like a magnet for this chart right here. The bulls playing great defense down here, looking pretty good. We have not lost it, although it got challenged a lot. Some could argue this is indeed a cut of the daily lows, and I would agree, but the weekly time frames kind of show the full picture, right? We're just in a bit of awkward consolidation here. It's anybody's game right now. In my opinion, what happens on Wednesday with the Fed is going to be the determining factor which way this chart breaks. Now, overall, if we move a bit lower, 1154 down to 1116, this decent little nibble area for Netflix, in my humble opinion, guys. I will be adding a tiny little bit more to my Netflix position in the event that we come down there. All in all, though, guys, as well, tough to swing trade unless you take today's low, which is not very good, right? Because we have an unwind right here into the bottom end of support. So very tough. When you have a nice new daily uptrend, it's easy to enter and set a stop loss down below here because you know you have the daily uptrend and the bulls have the best chance, right? When you unwind an uptrend and you're at the bottom end of a support range, it's kind of tough, right? To just set a stop loss below there and say, well, I'll just trust the support level and we're probably going to go for a long here. Kind of tough because we lost all the momentum. So no swing trades on Meta for me. However, on Netflix. However, it will be a longer term portfolio add for me, 1155 down to 1112. Just a lack of clarity on the short term price action right here, both on the daily and the weekly, trying to go for trend continuation, but it's not happening. Moving on to NVIDIA right now. NVIDIA down about 0.04%. They were down a lot more early morning, guys. 1.6, 1.7% off of news that the Chinese government was going to dissuade from certain sectors to be monopolized by certain companies. They're mainly talking about NVIDIA for the whole H20 chips on the mainland and whatnot. So obviously that news hit the company pretty hard early morning, but they were able to recover from that piece of news. That being said, not too bad right now here, guys, on NVIDIA. It was a daily downtrend. You got a nice 618, 78 retracement right now. Like 618 to about 78.6 retracement. Very nice retracement size right now on the fibs. Sets up the bulls with some very nice space to go for the daily higher lows, which we're doing right now, and go for the trend change expansion. So support level remains below 171 to about 165. On the weekly, I mean, it's been pretty clear what's happening, right? It's just been a bit of weekly consolidation in the context of a very nice weekly uptrend. In the event that Jerome Powell is really not nice to us, and we unwind everything and flush the lows, and we end up in a weekly downtrend, first of its kind in the last 6 months, you guys need to understand, right? Just when in doubt, zoom out. What are the monthly timeframes looking for? You'd just be looking for a bit of consolidation. And I've been saying now for the past few weeks, if I can find some short puts on NVIDIA in the 150 area and or some shares, I'll be a big fan of playing it down there. Prior to the Wednesday rate cut event, a little bit tough to kind of guesstimate which way this one's going to break, so I'll just rather wait and see. But at 175, the valuation is not too expensive at about a 1.71 peg. Moving on to Tesla right now. Tesla up about 3.56%, but it was up a whole lot more. At one point this morning, Tesla was up 7%. Why? Well, Elon Musk just bought about $1 billion worth of shares. Obviously, trying to get in the good graces of the board to approve his $1 trillion pay package. And as a result, the price action of Tesla in the most recent few days has been phenomenal. 7% on Friday, almost 7%. Well, it was 7% today, but ending half of that, 3.56. Strong move on Tesla. And that's what we've been saying for a while right now, right? The bulls were kind of knocking at this resistance range door, staying really close and into it. And we were saying we were watching for the break and possibly the reaction from resistance. Well, they blew right past the resistance target with that piece of news. That was 406 down to 382. Now, we will see if the weekly candle is able to close above this area. One clear break, though, was, of course, the 360 to 340. So now the bulls never lost the weekly uptrend. It was always a weekly uptrend with a bullish leaning bias for the break. I was kind of hoping for a breakout into here and retest to set me up for some trend continuation right there. Didn't quite happen in terms of that way, but we'll see how this weekly candle closes. If it cannot close above resistance, I won't close this box green. I mean, I'll gladly close this one green. Let me just do it for you guys right now. So this box down here is now support, but if we pull back on the price, it could be interesting for some Tesla, right? You're not gonna find me chasing Tesla up here, but in the event that we pull back, right, down into here or something like that, maybe we might be able to find some locations for some swing trades with some stops under there, going for the next leg of expansion on what time frame? The monthly time frame as well, right? It's not looking too bad on the monthly. We had some very awkward price action right here, but the Tesla bulls are looking pretty good right now. Rate cuts obviously having a big factor on Tesla's share price action right now. Moving into Palantir. Palantir, not a bad day for Palantir, but just kind of doing, well, not Palantir things. People are used to this one going up 3-4% per day. Daily uptrend is very nice right now. You're still looking for a new daily higher low on any consolidation, anything at this point above 148. Looking for a new daily higher low, and you might just be looking to backtest these range highs of 162 and all the EMAs. They did it once last week. You might be looking for a second time for some possible longs to be activated, but obviously Wednesday's action is going to be a big determining factor for Palantir. The weekly bulls remain in full control of this chart. Nothing to see here at all. Where you would get a little bit, not nervous, but where you would take some pause is in the event you come right back down and snap back down into this range. At that point, you'll be looking for the bulls down here, 148 to 139 to play some defense. Any quick and very volatile price action from Palantir throughout this week, I probably will be exploring some short puts down here, maybe like 130s, and you can find them when you have VIX expansion and Palantir gets like a 6-7% quick downswing in the mornings. I mean, it's happened so many times, right? So many of these candles have been 4, 5, 6% moves before the bulls kind of start buying the dip early morning. Find another one of those and we might get lucky and find some short puts down here on Palantir. No other swing trades on this one from me. Moving on to SOFI right now. SOFI up 4.22%, looking really good into Wednesday's action, creating a lot of space off of lows right now. At this point, 24 are your daily higher lows right now. Beautiful leg of daily upswing. Any move lower looking for a new daily higher low. The weekly charts are looking fantastic. It's pretty much just vertical at this point for SOFI. They gave us one tiny little back test down here at the 24 level and then just kind of ran with it immediately. If you get any pullbacks, guys, I'm still a very big fan of selling some put options down here on SOFI, accumulating a few more positions as we were talking about when it was happening back there in around 25, which would be the pullback area. SOFI's valuation is still somewhat fair in my humble opinion. Obviously not as good as when we were buying back here in the whole, $13, $12, $11 range, but still pretty fair. At this point, are you chasing SOFI? Yes and no. You're definitely chasing it in the short term, but I think the long-term status of the company is fairly clear. $40 billion, $40 to $45 billion market cap throughout the next 12 to 18 months is not off the table right now. That would be an increase of between 30 to another 50% on SOFI stock. I'm not saying it's going to happen overnight, but I am saying that with the company's fundamental expansion, it can have that valuation in the context of a growth and tech-oriented market, which it kind of is right now. But beautiful breakout by the bulls. Congratulations to all SOFI shareholders. Moving on to Uber right now. Uber up 3%, going for the infamous $100 break, guys. Really nice price action on Uber right now. It's a bit tough to play in terms of the short-term price action because the daily chart was very, very, very choppy, right? Here, you had a bit more clear price action. Here, it's just a whole bunch of fighting between the bulls and the bears right now, but the bulls seem to be winning this battle. If you take a look at the weekly time frame, this one provided the most amount of clarity. Beautiful weekly uptrend. They never lost it. It got tight here for a while into support, which was 93 to 90. Never lost it, going for the now. Finally, the leg to the $100 level of expansion. Now, this area right here, 95, 96, will become future support. So in the event we smash through 100 and pull back to it, that would be a not too bad area for some swing trades. I'm just holding my Uber shares that I have right now. I haven't added to them in a while. But in around the $90 range, it was trading at a fair valuation, so keep that in mind. Is it too late for Uber? No, but once again, you do have to have like a 3 to 5 year time horizon to justify buying up here, because obviously your compound annual growth rate won't be as good as like some of us who are buying it heavily within like the $75 down to $60 range, but it's still not bad. Very strong company. Uber for me remains a nibble right now, but mostly a hold. Moving on to TSM right now. TSM up 0.79%. Very solid, but kind of just reacting inside of the most recent few days of price action right there. Very strong, guys. Beautiful daily uptrend on TSM. Nothing else to say. Any move lower. Looking for a pullback. Anything above 225, just looking for a higher low. And at this point, 247 down to about 239. This whole previous area of short-term resistance will be your newfound area of support. Talking about roughly, the confluence with the 12 EMA and the 26 EMA at the same time. The weekly chart looks phenomenal on TSM. Beautiful breakout. So in the event we pull back this week, I do still think it'll be a phenomenal area to be scouting some swing trades now that we've broken the level, breakout, retest, and possibly run. That could be interesting also to add a few more shares to the long term, because we know in around 245, the valuation of TSM is not terrible, like mid-20s forward price to earnings, mid 1.5 PEG ratio, really not that bad at all. And the guidance is phenomenal. But also selling some put options down here, guys, under 240, not a bad proposition as well for the near-term future. I love TSM, and I'm definitely holding every single share that I have in my long-term portfolio. Now, that is everything for your overall market rundown. I spent a bit more time on some charts, spoke a bit more about some stocks because we didn't have news to cover today. We didn't have earnings either. So just some context, right? Because tomorrow I'll be going through a lot of charts, but maybe spending a bit less time speaking about them individually, like a bit of the backstory and stuff like that. I'll pretty much just be giving levels. But now, let us jump into everybody's favorite section of the video, which is the biggest gainers and losers. And we're going to spend about 10-15 minutes on this, no more, no less. So let's jump right into it real quick. All right, so first things first, we're going to start off with Duolingo. So Duolingo down another 7.4%. Duolingo has been struggling a lot, man, because of, all the AI narratives, right? In terms of disrupting the learning models, right? In terms of disrupting the language learning models. Well, the Duolingo is a language learning business model, but you guys know what I mean, not to be confused with the LLMs like the chat services and whatnot. So the narrative is very clear right here. It's very negative sentiment on this stock, and this stock will have to do something like Google. This reminds me a lot of Google when people used to claim that AI was going to ruin Google's business model. Well, now those same claims are being made about Duolingo's business model. The bulls for Duolingo have a very clear thesis, saying that, well, translation services have been around for a while, and if you add even more of them, that will not take away from people who actually want to learn a language, because obviously learning a language versus just translating a language are two completely different niches. So that being said, the stock is still suffering and probably will still suffer until it keeps showing us earnings to the effect of the contrary, kind of like Google had to do, right? So this stock may be a bit of a tough buy and a tough hold, maybe even throughout this entire quarter until we get next quarterly earnings and we're able to determine what is the impact? That's what Google had to do for a while. They just had to keep showing us good earnings after good earnings after good earnings to kind of disrupt that negative sentiment, negative thesis that was around the company. So Duolingo, next stop, unfortunately, will be down here, 242 down to 207. And this might just be an area where I will be interested to add a bit of a position on Duolingo. But as of right now, I'm kind of just chilling and kind of sitting back, letting the narrative play out on it right now. No daily uptrend shift. That's really step number one if you want to see an end to this weekly downtrend and weekly consolidation, because the bears are in full control right now, let's be honest. Dutch Bros, not my favorite company. I'm not trying to buy a coffee chain right now at over 100 price to earnings. I mean, some tech companies, yes, but Dutch Bros definitely not. Phenomenal company, phenomenal business model as well. I like what they're doing. They're growing their business model really well. Price to sales is not terrible right now. The market cap is like a 10, which is not too bad, right? But at the end of the day, like, it is a coffee shop, right? It's not like you're buying Palantir right now or something like that. I mean, annual sales, by 2026 is about 2 billion. Market cap's about 10 billion. It's about a 5 price to sales, which is fair. Perhaps Dutch Bros will get some interest from me if we can make our way down into the lower 50s, maybe for some short puts or something like that. I mean, this one, for people who have some shares down here, it's pretty much a hold, but it's a bit tough for me to start a position here saying the company is wildly undervalued and that it has phenomenal growth in the near-term horizon. Perhaps it does for its own respective segment, but in relation to other, bets in the market, probably not my favorite one, but Dutch Bros, not too bad of a play overall. BMNR, we talked about it through ETH as a proxy. BMNR, if you guys want to know, mid 40s to low 40s for me. I'm still acquiring a bit more BMNR. ISRG, phenomenal company. I don't talk about this one a lot, but this is one in my long-term portfolio. I mean, guys, they have, it is right here, take a screenshot, right? They have 60-65% of the market share, ISRG. If you don't know what they do large surgical machines for very small micro surgeries. You guys ever seen the doctors put their hands in like gloves in a machine, and the machine kind of like operates robotic arms and allows you to do very precise movements for open heart surgery, brain surgery, and many different other applications? This is the company that has the best machines across the planet. You can kind of label it the ASML of healthcare in a certain aspect. They have a huge market share, market-leading tech, of course. and it's very tough to replace the products. That being said, the stock has just been coming down and down and down and down with other niches of healthcare. This one for me is a buy for the long term. And if you want to know what they're doing, they're just going through a bit of a phase of a monthly downturn right now, and they're consolidating on the quarterly charts, guys, down to the 12 EMA. Phenomenal push right here, but ISRG does this. It's not the first time it's done this. I've been following this stock for a while. Don't talk about it often. This is probably one of my favorite healthcare companies. So I've been building a position since the tariffs. This is a new position for me. I've been building a position every month, just DCAing a little bit, and I will be DCAing more all the way down into the lower 400s or even under if they graciously want to give it to me. I think this is one of the best companies in the market that people don't often talk about. Yes, the valuation is rich, but because they have such a high amount of market share and such consistent fundamentals, right? And such a large revenue ramp, possible addressable market, because right now a lot of their segments are in North America, but they're expanding Europe, Asia as well, and they've been around for a very long time, guys. Moving on further, I mean, some of the home builders, that'll also be a reactionary play into, let's say, the Wednesday session into Thursday. Home builders, I'm a big fan, man. If we get a big decline on some of the home builders, shout out to the home builders. If we get a big decline, I probably will be playing either some short puts or maybe even loading up some call options for the longer duration if we get some pullbacks after Wednesday's event. Shout out to companies like Rocket Mortgage as well. If we get a pullback on Rocket Mortgage, I'll probably just be accumulating some shares, maybe playing some short puts under the market. Anything rate sensitive, directly related to real estate, I probably will be playing. And shout out to Open Door as well, of course. We'll talk about it later, but Open Door as well, right? Any big volatile moves down here might be a nice opportunity to reload some swing trade longs. Looking very solid, but just remember, especially on plays like Open Door, not the rest of what I just talked about, but Open Door, only invest what you're willing to lose, guys. It can squeeze a bit more, but it can also, kind of pull back and do nothing for a month. And some of you guys might just feel trapped up here. So keep that in mind. Moving on to Oscar Health. Oscar Health for me, if it comes back down to like 17, 16 and a half, probably good opportunity for some short puts. It's just been refusing to kind of break out of this 20 location, but the weekly chart's looking very good, right? Nice little weekly uptrend that we have going right now. So looking pretty good, a lot of space. If you pull, as I said, if you pull back down to this whole 17 area, selling some put options down there, I'm a big fan. CLH, same concept. If you pull back down to the low 50s, 52, then a 45, decent area for a back test, breakout, retest, possibly run at 55 bucks. I mean, it's not the cheapest stock in the market. They have a good growth rate ahead of them. A lot of that growth, let's be honest, is really coming from the, the Alani portion of the business. Overall, not so much from Celsius, the legacy brand. And we covered that, right? Alani was up 129%. Celsius was only up 3%. Nobody talks about that, where the growth is actually coming from. But growth through acquisitions is one way to do it, of course. They also now have the Rockstar brand under their arm because of Pepsi, just basically giving it to them or giving them, the rights to kind of pump the brand for them, because Pepsi, not that they mismanaged the brand, but they didn't milk the brand as much as they could. So decent expansion here from CLH. Pullback here, not the worst play in mind to play on a pullback. If you take a look at HIMS, just cover some of the growth stocks, right? HIMS, nice breakout. Breakout of where? This whole resistance range, yeah? 52, 53, down about 48. It's been an area that's plagued the bulls. Whenever we broke down under it, big resistance. Above it is support. Resistance again. So I'm expecting it now to play as support. Beautiful daily uptrend. Looking for a new daily higher low. Pullbacks into this location, decent for some swing trade longs, but you have to put a stop loss below 47. Go for the expansion on the daily and also on the weekly timeframes as well. HIMS is not looking too bad. I'm not adding any shares personally. You guys might remember I bought some shares down here and I sold half of them at about 57, 58. And now I'm just looking to ride kind of the rest. But HIMS, I mean, on a forward valuation, it's really not that bad. They're trading like 5 price to sales right now, which is not terrible. They can expand a little bit more and expand the market cap from a 12 billion market cap to like 20, 25 over the next few years would not be so far-fetched. I think that's all the ones that I wanted to talk about to the downside, because I know I want to cover a lot of these growth names. Airbnb down here, guys, 117, 115, very decent area for some Airbnb swing trade longs, but also selling some put options. That's why they're on the top 5 video yesterday. Now, we'll get into the ones that everybody wants me to talk about most likely, right? Which is all the names that just keep pumping 5, 6, 7, 10, 15% every single day. Because now we're getting into a market environment, guys, where a lot of you guys, especially you guys that don't have very good emotional control, that get influenced by either people pumping gains on Reddit or on Twitter or wherever you see people showing a lot of gains on some of these stocks because they took very risky, very concentrated positions. Now you guys feel like you're behind and you also want to have those gains, and as a result you start chasing some of these positions, right? Yeah, don't do that. There's always there's going to be different trades in the market at any given time. There's no need to chase the market at all, guys. Just stay in your lane and only play names that you have high conviction in. Never play a name because you just read it once, right? Or you just saw somebody talk about it once. Do your own research, do your own due diligence. That's how you derive size. If you're trying to follow people and just, copy their size without having their same conviction, if you buy some of these highs right now and you get some very severe pullbacks, you'll be left holding the bag, and you'll be questioning whether or not you should be holding these things in the first place. So, risk management always number one, guys. Now, let's get into it, right? Oklo, this is part one of stocks that have just been doing ridiculous numbers in the last 6-7 days. So you might be thinking like, oh no, it consolidated for a while. Now I've missed it. And yes, as a matter of fact, guys, like you have missed it. It's impossible to derive fundamentals on this company. It's a $14 billion company. They will not have any revenue until 2028. Now, yes, we know that there's going to be a big need for power, and Oklo will be trying to provide some of that power, but there's no fundamentals here. This is all just hype and all just narrative. It's not my favorite type of play unless we can find it during some big consolidation. So the next area of consolidation that would be very logical would be this area right here. If you get the breakout and back test, then it's very easy when we get a retest here to set a stop loss, pull back, set a stop loss below the weekly lows, and then we can go for another leg of expansion, right? But until we break higher, you don't know if the bulls actually want to play ball up there or if we go into further weekly consolidation, right? This entire weekly consolidation phase, we were saying, yeah, on the red days, it's good to sell puts down here. And some people made some decent money. On this consolidation phase where we broke out of this high and pulled back, I was saying the same thing. Decent area for some short puts under this area right there, but also decent for some swing trade longs with the stop loss and go for the next leg of expansion, right? So if you wait for the pullbacks, they will always happen. You just got to be patient for them. Moving on to another company, Resolve, right? AI agents that kind of do shopping for you online. This has been a big theme that people have been talking about for the last 3 to 6 months. This is one of the companies that's doing it. They're building it out in partnerships with Google and Microsoft as well, possibly Amazon in the future too. But hey, I mean, this is a stock that nobody used to talk about just a few weeks ago, and then Wall Street Bets picked it up, and now look at it, right? From $3 all the way up to $7, 150% in the last 3 weeks. You might think, oh man, like I'm super early. Well, as a matter of fact, like you're actually not, right? This company doesn't really have much revenue at all. Now, their earnings are supposed to be decent on October 1st, but if you feel like you want to buy this one, there's several ways of doing it. You would have to nibble your way in to some of the pullbacks, right? Now, short squeeze, option squeeze, everything under the sun is squeezing on this name. Very overbought on the RSI. This is another FOMO-inducing name. You see it up 15% every single day, 10% up every single day, and you just feel the need to buy it. If you do want to do that, go right ahead. I'm not going to stop you, right? However, any other people that want to play this with a bit more strategy, you might be looking for some very big pullbacks. And this one does have options on it as well. So you can play some short puts, accumulate some shares under if you really wanted them, and then ride the next leg higher. But chasing something like this up here, this is when, if I just look at this chart right now, guys, very easy for me. Like I look at Oklo, I look at Resolve, I just say, listen, I missed it. On to the next one, right? There's plays all over the place, guys, and you will never catch everything. You look at this list right here, some people just feel they need to have everything because they see names up 5, 6, 7, 8% every single day, and they're like, man, like I'm missing out. I got to buy all of these. No, the answer is no, you don't, as a matter of fact, right? Another name was quadruple U's, right? These plays consolidated for a while. You know, this was a nice critical minerals play. It rallied hard, and I was saying, well, just wait for consolidation period. And while it's in consolidation period, build your position. We were waiting for, consolidation here, but also all the way down into sevens. We were playing a lot of the wheel strategy down here on any pullbacks, and we were also playing positioning on call options while it was consolidating, positioning on call options for some upside, and now you get the upside break, right? So even after you have a massive first leg of a rally, you can get some decent consolidation phases, which will help you build some positions and or farm some premium. And now names like quadruple U's are printing on the highs as well. Iris Energy, same concept, right? You might look at this one and say like, well, when am I going to buy it if I don't buy it today? Well, after earnings, I was saying decent level to nibble, and even back here, it wasn't that bad. But now that doesn't help you guys, because now it's all the way up here. Up here at 37, the valuation isn't terrible, but it's starting to kind of run away, right? That being said, in the event that we get any pullback, because pullbacks are normal, and you pull back into here, into the 12 EMA, $30 flat maybe, well, you might have a better opportunity of selling some puts or maybe accumulating some shares. People that are looking to accumulate some shares in Iris Energy, they keep talking about the future, the future, the future. But let's be honest, guys, a lot of people just want the gains really quickly. They'll get into something saying they want to be into it for the next 3 to 5 years, but then they celebrate their gains super early, which is a bit natural. But then again, right, coming to the top end of price targets right now, I will remind you this company into the near-term future has about $1 billion in the pipeline for 2026. Then the revenue growth metrics, I mean, they're not expanding super crazy, right? They're expanding well, but not super crazy. So as this one moves into the 10, 13 billion, which would be a 10 market cap, which would be like a 10 price to sales, well, that's when you know that you're not getting the best deal anymore. Mid-20s was a decent deal still. Low, under 20s was the best deal, of course. Right now, it's not the best deal anymore. So if I had to play this one, I would be waiting for a pullback. If it doesn't pull back, no problem at all, guys. There's many other plays in the market, such as Affirm, right? Affirm, same concept. After their earnings, they went up like 20%, and I was saying the next area for some pullbacks on Affirm is that they come back down like low 80s, high 70s. That's a decent place to accumulate some shares. When you saw this candle bright green, you might think it will never pull back there, and yet still it did, right? So Affirm looking very good. Pretty solid price action right here. Weekly higher lows are set, and now looking for a little bit more. I love Affirm, even up here at about $89. It's not bad if you have a nice thesis for the next 1 to 3 years. You know, recovery of the consumer and lowering of the interest rates, which will mean that consumers will be more, they'll have a better penchant for buying anything associated with an interest rate, all things considered. Symbiotic, phenomenal company as well. We were talking down here, there was a great area to be selling some puts or building some swing trade longs. Now the bulls are kind of going for it. Not too late in my humble opinion, guys. It's really not. But once again, this is another play that you have to have like a, 2 to 3, 4 year time horizon as they build out their robotics offerings for various lines of production. Another company like that is Rintech Robotics. Got a lot of social media attention recently. The stock again was up 18%. Again today. Does this company have any revenue for a $500-600 million market cap? Very small cap right here. What's the revenue pipeline look like? Well, I'm glad you guys asked. If you take a look at the revenue pipeline right here, do they even have any? We don't really have any guidance beyond the next year. And even in Q3 of 2026, they're making $3 million. This one literally entirely a squeeze. So once again, feel free. I mean, if you guys want to play momentum and buy it here, be my guest. But other people may just be better suited to wait for the bigger pullbacks into previously defined levels. And maybe you can kind of take it from there, right? So pull it back into maybe like the threes area. Maybe that's where you can build a bit of a lottery swing trade position overall. CoreWeave, very solid. You guys know my thoughts on this. CoreWeave looking very good. Trying to shift the daily into a uptrend continuation right now, battling with resistance 124 to 116. Perfectly backtested our support range down here into the end of last week, 110 down to 95. CoreWeave, very simple. Accumulation of shares is good. Leap call contracts, such as the ones that I have, are also good. And then lastly, guys, selling some put options down here, if you believe in the stock and enjoy the valuation down here, is also not a bad proposition. The bulls are looking okay. They're trying to reverse several time frames here. The daily, and now trying to also put in a nice size bounce on this weekly chart here to set up the bulls for possibly a weekly trend change on any back test. This one will respond well to interest rate cuts because a lot of people keep talking about the debt associated with the company. So obviously the refinancing at lower rates is going to favor them. If you don't want to play Oklo, you might want to play something that's been left behind Oklo's price action, which might be SMR. Clear stop loss area for a swing trade long down here. If you want to build it from here, looking for the expansion, take profit number 1 target is a bit close, about 44. And then number 2 obviously is all the way back up here at 53. Not that bad in terms of price action. Circle as well coming back. Circle too. Circle is an accumulation trade, guys. Shares for a long-term trade, not a bad position in my opinion. The valuation down here is quite low. Bull and bull case scenarios, a bull and base case are on the screen right now. I think they're looking quite good into 2027. The short-term price action is trying to reverse right now, right? Trying to go for the new daily uptrend shift, which is something that we haven't seen in what? 2 months? Looking not too bad, guys. And even selling puts down here, if you want to sell puts with some volatility, 120 down to 110, not terrible at all. Elf Beauty, phenomenal push by Elf Beauty. We've been talking about this one for the longest time down here in the lower 110s. I was saying that was the last time to possibly build in some shares, and now we're looking great, breaking the resistance range 140 to 130, and the next stop 155 to 160. Looking like a massive inverse head and shoulders. The expansion leg on this one could bring you a lot higher, guys. 170, 180 would not be out of the question. Are you too late for Elf Beauty? Little bit. Not quite. I mean, short term, definitely yes. Longer term, 2, 3, 4 years of expansion with the Rode acquisition and the rest of the expansion of their brand. No, it's an $8 billion company. In my opinion, it can still be a $15 to $20 billion market cap company over the course of the next 2, 3, 4 years. That is still a very good compound annual growth rate for some longer term shares, so keep that in mind. But short-term swing trades right now, a little bit late in my opinion. Talk about ASML as well. Still a great company to buy down here, even though it's popped up higher. This one too, right? Some sort of an awkward, very awkward looking inverse head and shoulders, but looking very good. Any pullbacks on ASML, that'll really be the time to strike. I mean, we were talking about it just a few weeks ago. Down here was a phenomenal area to add. Now, it's also an add, but a bit less heavy than down there, although the valuation is still supportive of some expansion, right? Any pullbacks possibly coming down to the lower 800s could be a nice little nibble for us. And I think that's it, guys. I mean, I've went through so many and talked about so many as well. I mean, we can talk about more, like Reddit. Very tough for me to buy Reddit up here, right? The valuation is kind of a little bit stretched right now, let's be honest, and the price action is a little bit stretched as well. Very tough to position. This one is just a hold for me. APLD is another up and coming, NBIS, CoreWeave, like that whole data center renting out power. But look at APLD, right? This looks like a 10% move. It's actually like a 47% move, right? And you're also coming into resistance. So the easiest way to play this one is the same thing that I've been talking to you guys on this rally right here. Wait for the pullbacks into prior levels. It happened. This rally right here, wait for the pullbacks into prior high levels. It did happen as well. So not this rate, right? If you wait for pullbacks, right down here at the 16 and we want to write some short puts under there, or maybe build some share positions. I mean, this one too, right? It's coming into some top end of its valuation. It's a $5 billion company. And I know valuations don't matter to some of you guys that only play momentum, and that's fine, right? But I mean, we're still trading at like what? 12 times, 13 times, like 7 times, 8 times 2027 revenues. I mean, that's far out to project, right? They won't be making much of that revenue before 2027. So keep that in mind. Is it still on the cheaper side? Like, is there still some upside here? Yeah, but you're not getting as good as a deal as when we were talking about it down here at 10, right? So keep that in mind. And I think that's pretty much everything, guys. I mean, I could talk about so many more. Maybe tomorrow we'll spend more time on like the Shopifys of the world, and I'll put together some other stocks that I think are good buys, like Louis Vuitton. Solid buy right here at the lows. Very solid buy, part of that recovery of the consumer discretionary trade and everything. I mean, luxury is arguably somewhat more defensive than discretionary, but still it got lumped up with discretionary. Louis Vuitton, fantastic buy in this lower area, in my humble opinion overall. Even a stock like Rubrik, right? Rubrik is one of my newer positions in the portfolio. That being said, Rubrik, this company as well, phenomenal growth, but pulled back after earnings. 75 down to 70 down this whole support area. Decent for some shares. Leap call contracts. I'm using call debit spreads for my leaps and selling puts under the market. Very, very, very solid stock. Just one that I figured I should bring your attention to overall. But a lot of these names they've just been pushing, man. You know what I mean? Like Baba, just been pushing a lot higher. Sorry about all these squiggly lines right here. We're kind of doing this on the higher time frame. It makes a lot more sense when you look at it on the higher time frames right here. But even Baba, it's tough to chase Baba up here, right? Even if the valuation is not too expensive on Baba up here, it's just tough to chase a chart like this. You know what I mean? Like, deep down that you're not getting the best deal in terms of price action, right? Only if you have a very long time horizon. If you get a pullback on Baba, possibly back down to these guys, 144, 145, maybe then we can talk about some sort of a swing trade. But right now, it's kind of gone. The last area that I was talking about this one was down here, and now they're kind of all gone. So the moral of the story, guys, is in this current market, even a stock like Grab, right? Grab was an accumulation trade for the longest time. Now it's breaking up higher. So now people start talking about it, and now people get FOMO to position. But nobody wanted to talk about it when it was down here, you know? So in this current market, if I want to wrap up all these charts, a lot of these charts are the exact same thing. Big breakouts that possibly will induce FOMO, guys. Be very patient. There are always names that you can find on pullbacks. You do not need to chase anything, but in the event that you feel the need, you just cannot stop yourself from chasing things. You'll want to take half-size positions or 30% positions of what normally would be full size. Matter of fact, it should be literally the same mentality as when you walk into the casino, right? You walk into the casino with $100. If you think that you're going to walk in there and double it, well, you're psychologically starting at a negative advantage, right? Because you know that the house always, has an edge in terms of that. Now, buying these breakout trades that have ran so much in the last 2-3 weeks off of the premise of reductions in the interest rate environment, right? Well, essentially, it's kind of like playing the lottery trades as well, to where if you're buying them here, the best psychology to have playing these breakout trades is I will buy some here, but there is a 100% chance that I'm going to lose money out of the gate. Matter of fact, you should be planning for it. You should be saying, all right, I'll buy some Grab here, but I know it's going to come down. And when it does come down, to break out to retest a logical area of support, well, that is when I will be probably adding the rest of my position. But for sure, any buys that I make here will be coming down. If it doesn't happen, if it doesn't go down and it just breaks out higher and higher, perfect, no problem at all. That's just a bonus. But you should be entering every one of these breakout trades with the idea that you will need to possibly buy them on the retests lower, right? You just be buying them here as to not miss out on possible further continuation, but you have to manage the risk. There's always a trade-off, right? If you don't want to miss out on continuation, but you know that you're buying them high, well, then the only thing to do is reduce the position size. So keep all that in mind, right? So that is everything that I had for today's video. I spent a lot of time on the biggest gainers and losers section, a lot of time just to kind of get the point down before the Wednesday session. So hopefully you guys enjoyed. All those charts are the same, regardless of the company. They're all breaking out. A lot of momentum on them. Most of them are approaching overvalued territory, and you'll start to see people post a lot of gains on them and stuff like that. Don't feel FOMO. Don't chase, guys, right? Make your own investment thesis. And there's always some names that have not ran as much that you can possibly find some positions in. And also, we just wait for a corrective period environment in the market where a lot of these names pull back 20, 30, 40% in the blink of an eye. So always be patient and the market will reward you. That's everything I had for you guys today. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these every Monday through Friday. And last but not least, if you have any questions, feel free to leave them down below. That's it for me, guys. Have a great rest of your evening, and I'll see you guys tomorrow in the Tuesday market recap. Peace.